Episode 200 of Futures Radio Show, sponsored by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world effectively manage risk. For access to free educational tools and resources for the active individual trader, please visit activetrader.cmegroup.com.
Every day, traders and investors dive in to tackle the ever-changing markets to find opportunity. Futures Radio Show is your number one source for answers to the questions that all market participants want to ask. Veteran futures trader Anthony Crudele sits down with the most influential leaders and top traders in the industry. Now, here's your host, Anthony Crudele.
Hey everyone, before we get started today, I want to thank our sponsors. CME Group, Trading Technologies, RJO Futures, and TopstepTrader. Now today I spoke with John Hoagland, Senior Performance Coach at TopstepTrader. Since we both came from the trading floor at CME, I began today's conversation by asking John how he got his start. John explains how it's beneficial for traders to use both sides of their brain and how traders can benefit by having a performance coach. We talked about the importance of traders having their strategy in black and white and being able to adapt to the changing conditions. Finally, we talked about how trading is a business, it's a job, and you're a risk manager more than you are a trader. As usual, thank you all for listening, and please enjoy this episode. John, welcome to the show.
Thank you, Anthony. It's great to be here.
Well, it's great to have you on the show today, Hoag. Now, I just called you John, and then I called you Hoag. Some people are probably like, what's his name, Anthony? Well, Hoag was his badge on the trading floor. I've known John for over 20 years as we were both in the S&P pit together. And Hoag, you've actually been in the business for over 30 years, and actually even longer than that, because I know that your dad was on the floor of the CBOT, the Chicago Board of Trade, and you mentioned to me that you started going down to the floor when you were like 5 or 6 years old. So although I know your dad probably was a major influence on you getting involved in the trading industry, I still want to hear your backstory. So Hoag, can you tell us how you got your start in the trading industry?
Well, of course, going down to the trading floor with my dad, being so young, and back then they allowed people under like 16 to actually go onto the trading floor. It was very exciting. It was noisy. I had no idea what was going on until, of course, I grew up and kind of got into it myself. But going to school, going to work with dad was always about just going to the trading floor. He only worked 4 hours a day. Grains were 9 to 1:15, and then we'd go up to the office and we'd go out for lunch, do whatever. But when it came time for me to kind of make decisions on where I was going to go with my life, I was more of an artist. I actually started art school, and it became pretty apparent early that I was probably going to be starving for my art. So I decided to make a move and get back into the family business, if you will.
Now, I made a joke in a different conversation. I said, talk about a 180 coming from the art school to going to the trading floor. But you said to me, you know what, Anthony, there's actually some parallels. Talk to us about that.
Yeah, I firmly believe that if you're going to be a successful discretionary trader, you're going to need to use both sides of your brain, your analytical side as well as your creative side, because things change very often. We were just talking about the idea that things change quickly, and if you don't recognize that and respond to that, you're going to be behind the 8 ball. And I read something recently, I don't remember where I saw it, but it just struck me as so poignant when it comes to performance coaching, when it comes to trading, when it comes to being adaptable. It reads, you must have the ambition of an artist and the mind of an engineer. And that really encompasses that whole-brained kind of holistic view at anything you're doing, anything you want to be, anything you want to excel at, anything you want to be a master of. You really need to use both sides of the brain. So, as a creator, as an artist, I was using one side of my brain, and I had to learn to use the other side when I got into trading. But combining both of them, I think, has been crucial to my longevity in this industry.
Oh, I agree with that completely. And You've done a lot in this industry. You've been on the trading side, you've been a broker, and I'm sure you've been a runner, clerk, and have done all of the different jobs in this industry. And today you are a performance coach at TopstepTrader. And I am so glad to hear that TopstepTrader is using performance coaches, because I had a performance coach when I was on the trading floor. I didn't necessarily call him a performance coach, but that's what he was. His name was Mickey Hoffman. I'm sure you know who he is. And
Yes, I know Mickey.
He's helped a ton of traders. He was huge for me because I needed to be brought back down to earth so many times. This business is a business of highs and lows emotionally, and Mickey really helped me with that. And he helped me when I was in the times when I was doing really well to continue to do well. And when I was struggling, he gave me great advice to walk away, know when to stop, and just all sorts of different things that he helped me with that I really don't think I would have been able to really be successful without a performance coach. So talk to us about your role of being a performance coach for traders.
Well, I view my role as a performance coach as there's a lot of facets to it. First is accountability. When people put together, and even if they take the time to put together a solid trading strategy, some basic rules that they need to live by if they believe they're going to be able to survive in this. And it's always, I think Mike Tyson said it best, everybody has a plan till you get punched in the nose. And a lot of folks will put together a trading plan, we'll discuss it. I'll help them put it together if need be. But then there'll be specific rules that I'm watching for them to break. If it's, a daily loss limit, or if it's a certain number of trades throughout the day, if they're starting to become emotional, that's when the breaks come. And like you said, when, Mickey was telling you, okay, you're having a rough time, you're emotional, walk away for a little while. That's one of the roles that I have as a performance coach is, hey, this is what you said you were going to do. I understand you're emotional right now, but in the past, we've seen things get worse once you get to this level of emotion or this number of trades or this, things tend to snowball when you get to that level. So let's stop now. So the accountability is one part. The second part, I think, is nobody knows what they don't know. Nobody knows everything. I don't know everything. Anthony, do you know everything?
Absolutely not.
All right. So basically, especially when people are, new to futures trading, just trying it out, I try and lead them along a path that will help them recognize the decisions that they have to make on their own. I'm not telling them this is what you have to do, because if I tell them that and they think that that's what they have to do from this point forward, it's going to change at some time. So, as a performance coach, it's my job to help them realize their own decisions, recognize the fact that, hey, there's a lot more that I need to know. One of the things that I love to tell my coaching clients when they call me and they say, I keep making this same mistake. And I try and tell them, hey, don't call them mistakes, call them opportunities, because every time you say mistake, should have, would have, could have, had I, maybe I could have, any of those things, it's a sign that's telling you, hey, there's something else that you need to learn, or something that you once held as true may no longer be true. So we're constantly reviewing what we already know and adding more information. Anthony, there is so much information and so many charts and tools and indicators and everything, and none of them work or all of them work. It's all really up to how the individual addresses the trading environment.
I 100% agree. Everything works sometimes. And you can't be a trader that tries to piecemeal a strategy together by, I'm going to use fibs, I'm going to use trend lines. Today, look at this. I'm on a 15-minute chart, and then there's this trend line. Or the next day, you're on a 5-minute chart, and this fib is happening. That was the biggest mistake I made early on in my career, was just trying to find what was going to work that day. And it's hard enough to make money, let alone trying to pick a different strategy every day and just saying that, I'm going to just use this today because this looks like what should work today. And I know that you believe in this just as the way I do, is that a strategy needs to be in black and white. It needs to be written down. And working with these newer traders, how are you conveying that message to them? And how are you working with them to get to the point where they actually have their strategy written down and then start executing it?
Because I can, after doing this for so long and being in the industry for so long, I can see when they start to fall into strategy drift, we call it, right? Strategy drift. When they're looking at one thing one day and another thing the next day, I call them fish. Hey, you're acting like a fish today. You're jumping at anything shiny, and that's not what we're here to do. We've put together a plan. We need to execute that plan consistently, to be able to review that plan consistently, to see if it is going to work for you over time. Now, of course, things change in the markets. Your strategy is going to have to change over time, but it's the complete abandonment of the last strategy or tool. And okay, you know what? That didn't work today, so today I'm going to try this. The trading plan needs to change in gentle trajectories, because if you find a market, a tool, a chart, something that speaks to you, you want to continue to improve your mastery of it, if you will. You know, like I like market profile. Some people tell me, well, market profile is outdated and doesn't do anything. Well, I love to hear that, because the fewer people that are using it, the better off we're going to be. Those of us that are using it. So, you know, I've been using it for a long time, and I know that it's going to work for me over time. If somebody's working with me and they're looking at, fibs or general trend lines, that kind of thing, I encourage them to continue to master the thing that spoke to them to begin with. As a new trader, I always encourage play. Go play, go try a bunch of markets, go try a bunch of different chart types, go try a bunch of different indicators. See if you can find one that seems to speak to you, and then we hone it down to one or two charts, one indicator, maybe two indicators. We try and simplify things so we don't end up with paralysis by analysis. It's very easy to put 15 million things on your chart and then go, now what? We want to find simple ways to find consistency and get that risk to reward on your favor. I call it keeping the math on your favor, or keeping the math on your side, I should say.
Yeah, I mean, there are so many great tools out there. And like I said earlier, everything works sometimes, but you need to have a way of gauging your success at using that tool. And that was the mistake I made earlier on, because I was trading, like I said, different tools on any given day. So when I started to lose money, I went back. I really couldn't recognize where my mistakes were happening, and I wasn't getting better at executing a single strategy. That's when I decided for myself, I'm like, okay, I need to just pick a strategy, execute it for 6 months, get really good at executing this strategy, and then go back and look and see where my strengths and weaknesses are and get better at executing that strategy, because I'm never going to be able to pick which strategy is working on that individual day. So yeah, I mean, you make great points today, John. Now, I want to talk a little bit about the current markets, because this is where we go from having a strategy that has worked for us, and then all of a sudden volatility changes, right? It can get slower, it can get busier, and all of a sudden what was once working, to where you finally pick that one strategy, all of a sudden isn't, or it's harder to execute. So I know that you work with a lot of newer traders, and once you make money doing something and the market changes, it's hard to adapt. So how are you helping traders adapt to these changing environments?
Okay, this is an excellent question, and every time somebody asks me this, I'm reminded of the tech boom and all those guys in the Nasdaq pit that just basically traded buy side only for so many years, and when the market state changed, they didn't. Many of them lost what they had made, and they couldn't figure out why. And again, it starts very basic, Anthony. There are if you really look at it, there's two basic market states: ranging or balancing, consolidating, chopping, whatever you want to call it, and trending. So when you have a market that you are successful in that is ranging, and you're basically, let's say, reversion trading. Okay, you're up near the highs, you're short. Gets near the mean, you get out. Gets near the low, you buy. Gets near the mean, you get out. This is one trading strategy for a range type trade. As soon as that range type trade fails and a new market state ensues, let's say we go from ranging to trending, it's a different market. It's a different strategy. So you need to start thinking, okay, I'm recognizing that this market is in this particular market state. I'm going to be using this strategy. As soon as I recognize that the market state may or has changed, I have to change the strategy. Now, some people are going to tell me I'm crazy because, we all need one strategy that's going to work for us forever, but that doesn't exist. That's the holy grail that everybody's searching for and nobody has found yet. So when the market changes, let's say we go into an extremely volatile period of time, I may suggest to some of my newer traders, hey, watch and learn. Anthony, you and I have been through, several corrections in our trading career. And do I have a solid strategy that's going to consistently make me money in an extremely volatile market? Not necessarily. The moves are bigger, wider, stronger, wilder. If you're going to be engaging in these volatile markets, you're going to have to recognize two things. Yeah, your opportunities are great, but your risk is greatly expanded as well. So it's very flashy. Everybody wants to get in and make a whole bunch of money in these volatile markets. Very few people, I think, actually have the skills to be able to do so consistently. I think it's a lot of it might be, just luck. If you're not a professional trader, you're gonna be increasing your risk. And if you're not keeping the math on your side, in other words, if you're increasing your risk, you need big wins. You need to hold those big win opportunities in order to consistently profit in this. These markets, to me, Anthony, are very difficult. I don't like to engage in wild days. I'll find ways to make profits over time. And for me, I'm largely watching, except for longer investment type opportunities. If we get a big down move or a big down cycle in the stocks, I always view those as buying opportunities. But as far as day traders are concerned, it's more of a gamble and very difficult to put together a solid strategy for, in my opinion. I don't know, maybe others are going to disagree, but it lends towards emotional, flashy, lemming type trading.
Execution is everything.
Absolutely.
And if you know your strategy, then you know your strengths and you know your weaknesses. So when a certain type of market comes into play, you know when to be aggressive and when to be less aggressive. One of the things that I've taught myself is know when to be big, and know when to be small, and know when not to trade. That goes back to understanding my strategy. If things are lining up, the market doesn't have to be busy to make a lot of money. My best days were not days where the market had moves like we've seen over the last month or two. I mean, I've had good days during those times too, but those winners took care of themselves. But the days that the market was just maybe in a regular trading range, I've had some of my best days, career days, because I was executing on point and the market was responding to my strategy. So, Hoag, as a performance coach, how are you teaching that to traders? Because the one thing that Mickey Hoffman helped me with was ego. And when I was making money, I was an aggressive guy. I mean, that was it. When I was making money, I just wanted more and more and more, and that really helped me. But then when I lost, I would have the exact opposite emotion and just almost feeling like I wanted to quit. And it was really hard to find that balance. So I'm wondering, how are you working with these traders and all these different egos?
Well, I try and consistently remind them that you don't know everything. When you lose your humility, you lose the ability to be able to respond to what the market is telling you. When you become, proud or arrogant or full of yourself, you start to think that you're running the market. And every time I have said to myself, I get this now. I'm good. I don't have to worry about it now. All I have to do is take trades and I'm going to make money. It's been danger at my door. Every time I have let that guard down, I get a right cross. So particularly after a very big winning day or a streak of winning days, I try and remind people, hey, you've been trading really well lately. That's great, but don't get cocky. Sometimes I'll even suggest, hey, take a day off. If you're feeling the pressure of keeping this winning streak going, break the streak yourself, but do it on your terms. Take the day off. Start the following day from zero. Get your feet on the ground. And I do try and tell all of my clients, hey, yesterday doesn't matter. Today you start from zero. Today you start from zero. You start to make a whole bunch of money. You start getting a little bit of gambling mentality, thinking, okay, I'm trading with their money now, or I don't have to do the homework because I had such a great day yesterday, or I don't need to stick to my strategy and I need to leverage now because I just made a whole bunch of money yesterday. Some of my worst trading days have been the day after some of my best trading days. So I always try and speak humility. Remember, the market is bigger than you. Start from zero. And the thing about humility, Anthony, is the minute you say you have humility, you've lost it.
Making great points today, Hoag. And something that I've done over my career, because I suffered from that as well, make a bunch of money, think you're playing with house money, and get whacked.
Mm-hmm.
And it happened to me. I don't even know how many times. I can't count. It's how many times it's happened to me. And what I started to do was I would just order a check or I would take time off, because once I go on a good run, the best thing that happened to me was being able to take the money out and be like, okay, start back with my account where it was when I went on that run. And I just felt that I started to manage risk better. Again, I was like, okay, let's build again. That really worked for me. And I had to play these psychological games with myself because I was so aggressive. The more money I had, the more aggressive I would be. This is the way I was built. And I've had to train myself, and I'm still working on it, is that when I go on runs, manage risk the same way that you got there. All of a sudden, you can't just start trading bigger and doing things, because you get a little numb to it. And that brings me to the point that trading is a business. It's a job. And I know that you guys really instill this at TopstepTrader, and it's one of the great things that you guys do for your traders right at the beginning is you don't even talk about charts. You don't talk about any of that. You talk about managing risk. This is a job. It's a business.
Mm-hmm.
So what are you doing as a performance coach helping your traders recognize, right? Because there's nothing worse than knowing something but not recognizing it and actually applying it, that this is a job. It is a business.
Well, most of the people that take the time to actually, get into the personal performance coaching are already kind of beyond the idea that, hey, they can do this as a hobby, or that this is just something that's easy. They've already come to the realization that, hey, if I'm going to do this, I need to get serious. A lot of people have other jobs. They have other things that they need to do. One of the ways that I try and help them, is when you have other things to do. Let's say you're on the West Coast and you've got to be at work at 9 on the West Coast. Well, you've got a couple of hours of the U.S. session with which to get involved, but that's the only time you have to get involved. So people tend to think, well, if I'm a trader, that means I have to take trades, and if I only have 2 hours to trade, that means I've got to do something. And it kind of lends to the idea that, okay, I'm going to take secondary or third trades, or trades that aren't even part of my strategy, because nothing is lining up with my strategy, but I have to do something because I'm a trader. Well, I try and help kind of alleviate that pressure on those folks that do treat it like a business, but only have a certain amount of time to be involved. Is you're not a trader, you're a risk manager. And if you do not have alignment in the market with your strategy within the 2 hours that you trade, you do not trade. This is how a professional would work a business. This is how you need to work your business. Those that have more time with which to trade or are trading overnight, I just try and always remind them, okay, this is a calculated trade. Every trade you take, you're assessing where the point of failure is and where your risk is, and you are then assessing what is a real and probable profit target for this trade, every trade. And before you put that trade on, you ask yourself, is this in my best interest? Is this in the best interest of my business? So trying to keep that on their lips, as well as the myriad of other things that we talk about, is something that, I just have to continue to reiterate over time. And pretty soon, those things are becoming second nature, secondary functions, if you will. They're already thinking, okay, this is a business. This isn't a game. It looks like a game. It's seductive. It's flashy. There's pretty colors, and all I have to do is click a button to buy and sell a whole bunch of leverage. That's a serious business, right?
What you're doing is setting the tone right out of the gates, right off the bat. Get them
Absolutely.
coming in. Get them coming in with the right mindset. It's so important.
Absolutely. As a coach, I can tell them that until I'm blue in the face, but until they come to that realization with or without my help, then they're going to fight that.
I find myself going back to a retail mindset on occasion, because it's very hard to stay in that professional mindset all the time, because sometimes the market does something or something happens and you go back and you make those mental mistakes. And right away, because I've been doing this for so long, I recognize that that is a mistake, but I fix it at that moment. And that's the one thing I think that separates, professionals from retail as well, is that professional traders are going to make mistakes, but they recognize them quicker and they react to that right away. They don't say, okay, I made this mistake today and tomorrow I'm going to come back and fix it. No, the professional fixes it as that moment, as it's happening in that moment. So you just have to train yourself to recognize when you're doing something wrong in the moment, and then boom, fix it there. Don't fix it. Say you're going to fix it later. It never works, right?
Yeah, absolutely. And it is that presence of mind to recognize, number one, you are at risk of making that mistake. And then if you do make it, rectifying it right away. I tell people, we all tend to make the same mistakes over and over again. I do it. I'm sure you do it. And as we've been in this for a longer period of time, we kind of recognize that those mistakes that we make over and over again are fear-based. And if you can get in the mindset or the mindfulness of recognizing when you are at risk of making those fear-based mistakes, you can catch them a little bit beforehand, or just, usually when I make a mistake like that, I think, oh, I just did it again. I got to get out of this. Sometimes you'll even catch it beforehand. You'll say, you know what, I know this. I've done this before. This is a trap. This is a fear-based decision. I have to wait on this.
All of the professional golfers say golf is a game of misses. Trading is a game of minimalizing mistakes. And you have to have that mindset if you want to succeed in this business. And that's just my 2 cents. Great stuff, Hoag. Great stuff, Hoag. But we're not done yet. We have rapid fire questions if you're ready for those.
All right. Rapid fire. It's the lightning round.
All right, everyone. Our rapid fire segment is sponsored by Trading Technologies. Access the global markets from virtually anywhere with TT. They are the world's fastest commercially available futures trading platform. And now you can trade cryptocurrency spot and derivative markets side by side. For more information, please visit tradingtechnologies.com. Hoag, first question. What trader has influenced your life the most and why?
What trader? It's going to be somebody that I've actually met, somebody probably from the S&P pit. I'm going to say Mesta, perhaps Steve Prosnewski.
What was one of the hardest things that you've had to overcome in trading?
Self-esteem.
How has your trading evolved over the years?
Well, pit trading to screen trading involves a period of unlearning what you used to know and learning what you need to know now.
What's the number one resource you spend your time on?
Market profile, open interest, and volume.
What's your favorite book about trading or the markets?
Favorite book would probably be two of them, Mind Over Markets and Markets and Profile by Jim Dalton.
What's your favorite movie or TV show about trading or the markets?
Everybody's favorite, Trading Places, of course.
What's the best piece of advice that you've received about trading or the markets?
Learn how to take a loss.
Now, if you could give a piece of advice to the new people interested in getting involved in trading, what would it be?
Be patient. Take it easy on yourself. Don't risk real capital.
Last question for today. If you weren't involved with the markets, you'd be doing what?
I'd be a rock star. What else?
Where could people find you on Twitter, and give us a website to check out?
www.TopstepTrader.com and on Twitter at TopstepTrader.
Hoag, it was so great having you on the show today. I really appreciate you taking the time for coming on Futures Radio Show, and I look forward to having more conversations with you in the future.
Anthony, it was a lot of fun. Hopefully this is helpful for everybody. Thank you very much. Always a pleasure to talk to you.
Thank you for listening to Futures Radio Show. If you have any questions or comments for myself or my guests, please visit futuresradioshow.com and sign up to be a premium member for free. If you enjoyed the show, don't forget to leave us a review on iTunes.